I'm Matt Bouchard with NAREIT.com here at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is Andrew Silberfein, President and CEO of Rouse Properties. Andrew, thank you so much for joining us.
Thank you for having me.
Let's start by talking about the ambitious portfolio repositioning that the company's undertaken. Can you talk a little bit about the progress made so far and what you expect your final portfolio will look like?
Sure. Since spin, which was early 2012, we've completed major renovations, capital projects on 10 out of 30 of our original properties. You know, they've been very well received by the retailers, been very well received by the communities, and that's encouraged us to look for additional projects to do. So we've now upped the total that we're going to be doing to about $350 million throughout the portfolio. And these are going to be a combination of both strategic and cosmetic renovation projects, which really changes, the cosmetic changes the look and feel of the assets. It changes the common areas, the streetscapes, is whitening and brightening, and the strategic projects are more encompassing. In other words, taking parts of the mall that were vacant anchors or unproductive space and makes it more productive. So the reception has been great. We're creating an enormous amount of value creation in the portfolio. We estimate at the end the value creation will total somewhere between $700 and $750 million, which translates to about $12 to $13 per share.
And as your portfolio has gone through this change, what sort of trends are you seeing in terms of tenant mix or retailer space needs?
You know, we're seeing continued retailers that will are blurring the lines. So they're going into both malls, going into outlet centers, going into power centers, and really what we're doing in our malls is we're adding those various components to our mall. So we're adding a lifestyle component, we're adding a power center component. So really it's morphing, and what we've tried to do since our formation is really focus on adding. We've been doing this for a long time now where others are just talking about it, but we've been focusing on adding high volume restaurants, entertainment tenants, everyday uses in large format, or junior anchors to our malls. So we've signed about 2.5 million square feet of that, and we're in the process of adding those throughout the portfolio.
Great. And how has the role of the mall as part of the local community evolved over the years?
What's really interesting is about 85% of our assets are the only enclosed mall in our market. So we really effectively function as the downtowns for many of our markets. So the question is, how do you make these properties more relevant to the consumer, more part of the fabric of the community? And that's by spending a lot of time on the assets, spending money on the assets, creating a better tenant mix, a better quality of the retailer, as well as an experience for the consumer.
Great. Andrew, thank you so much for joining us.
Thank you.
For more from REITWorld 2015, be sure to visit REIT.com.